one.
Good evening, friends. ANMI Western Region is conducting this 57th webinar in association with MCX as a part of ANMI's Silver Jubilee Knowledge Series and second webinar in this month. It is my pleasure to welcome Rishi Nathany, who has promptly accepted our invitation today to share his view and also agreed to moderate the session. Mr. Rishi required no introduction. He is a chief business officer in MCX, having a professional experience around 30 years. Commodity derivative market have taken a large space in capital market in the advent of reforms SEBI is bringing out for last 6 months. There are many more new initiatives. MCX, being a leader of commodity space, has taken and introduced new products which are in a pipeline. In this background, it is the right time for us to understand from Mr. Rishi and our distinguished panelist, Mr. Ramesh Varakhedkar, Head Commodity and Currency, ICICI Securities Limited, and Mr. Kunal Shah, Head of Commodity Research, Nirmal. I am highly thankful to both the panelists who have agreed to be here and share their valuable views before our members. I now request Mr. Rishi to take forward the session by sharing his initial view on the topic.
Thanks, Mahesh. Yeah. Thanks, and good afternoon, everyone. It's a pleasure to be here with all of you this afternoon to talk about commodities, and thank you, ANMI, for inviting us for this event. We have with us two very prominent personalities in the commodities industry. We have Ramesh from ICICI Securities and Kunal from Nirmal. Both need no introduction. And today we will try to talk to you about the recent developments of the commodities in the commodities markets and what we see would be the way forward. So I'll just give a brief update as to what we are doing at MCX and what we see going forward, and then I will invite the other speakers to also share their thoughts and views with you. First of all, I'd like to just say that why should you invest in commodities? Let's take the most basic point. So we can talk about developments and everything, but if you're not convinced about commodities, then our entire conversation is useless. Like a building is useless without the foundation. So let me talk about the foundation piece of this whole discussion is why should you invest in commodities? Now, there are various advantages of investing in commodities. The first thing is that commodities are counter-cyclical to equities and bonds in the long run. So because of that, right now, of course, because of the global liquidity deluge, you're seeing everything going up in the same direction. However, in the long run, commodities tend to be counter-cyclical to bonds and equities. And so when bonds and equities don't do so well, commodities do well and vice versa. So in that sense, it gives some sort of a balance to your portfolio. It reduces the risk or the standard deviation of your portfolio by adding commodities to it. Secondly, the advantage of having commodities in your portfolio is that your portfolio gets a large hedge against inflation. Because inflation is nothing but the increasing prices of goods and services. So in that sense, again, if you have commodities, which are goods, you will be insulated, your portfolio will be insulated against inflation to a large extent. The third advantage of investing in commodities is that, especially with internationally referenced commodities, like say gold, they give you an inbuilt currency hedge. So many of us invest abroad, or many of us, go for holidays abroad or send our children abroad. So we are worried about the currency movements apart from the growth of our money. So, for example, let's take the price of gold hasn't moved from $1,800 an ounce for 1 month. However, the rupee has moved from 73 to 75. You'll find that the domestic price of gold has gone up. So basically, commodities will give you an inbuilt hedge against inflation. Because of that, it makes sense to invest in commodities. Now, these are some of the advantages of commodities, but having said that, everything you see around you is commodities. The place you're sitting in, the food you're eating, the clothes you're wearing, everything, the chair, table, everything is commodities. And commodities are an integral part of our daily lives. So because we use and consume commodities to such a large extent, why should we not invest in them also? Apart from that, commodities are the basis of economic activity. So if you see globally, all the wars have been fought mainly for commodities. whether it's for oil, for spices. You go down in history, all the wars are mainly for control of commodities. Similarly, economies have been built on the backbone of commodities. So commodities form the basis or the foundation of any economic activity. And if we feel that India or the world economy will grow in the long run, then definitely you should be invested in commodities. So in that sense, my point is that please definitely look out for commodities in your portfolio. And to, on a lighter note, to say that if you're having a meal and you get one more item in your meal, the meal becomes more interesting. Similarly, in your portfolio, if you have one more asset class like commodities, the portfolio also becomes more interesting. So you should always try to add as many asset classes as possible. And generally, there are only 4-5 asset classes you can have, whether it's equities, fixed income, real estate, or commodities, or insurance. And now, of course, you have other newfangled some asset classes, which some people prefer, some don't. So in that sense, commodities there is an investment logic to investing in commodities. So what I wanted to say is commodity markets are not about only futures and options trading. It's also for investors. Now, the second point which I wanted to say is the participation base in commodities markets is much more diverse and larger than any other asset class market. So for example, in equities or bond markets, you find issuers, you find investors, primary and secondary investors. In commodity markets, not only will you find investors and of course the traders and speculators that are there in equity markets also, but you'll find the producers, primary producers, whether it be a primary metal company or a farmer or a farm produce organization, or you will find exporters, importers, you will find consumers, end consumers or intermediate consumers who will use the commodities to make something else. For example, a fan manufacturer will buy aluminum or copper and then make a fan. And then again, the end user will buy it. So there are so many participants within this commodity ecosystem, which makes it much more vibrant. Now you might question the point that Rishi is waxing so eloquent about commodities, but why are commodities not so traded as equities are? So very, very simple that, you can blame it on historical reasons, that equities have been trading non-stop for more than almost 120 years in India, whereas commodities have only started trading in the last 16, 17 years. Before that, they were not allowed to be traded in India for a large gap, more than 50, 60, 50 years. Commodities were not traded in the exchanges. So in that sense, India has a very, very long history of commodities, but in the regulated exchange format, it is just there for 17 years. And naturally, you cannot, and equity markets in the electronic form are now 28 years. So you cannot compare the prowess of a 28-year-old to a 17-year-old. So give us also 10, 11 years. I'm sure we will be doing, if not better, at least as much as what equities are doing. So in that sense, we feel that the commodities markets will grow from strength to strength, and you will see much more growth and much more participation in these markets. And the participation and growth will come in two ways. One will be products and the other will be participants. So historically, the commodities markets started growing and received a huge fillip in 2015-16 when it came under SEBI. So first couple of years, the risk management and the systems and processes were being brought up to par with the equity and other exchanges. But after that, SEBI has been very kind to grant us more products and participants. And RBI also chipped in by allowing bank broking institutions to take membership, like Ramesh is there from ICICI Securities. Maybe 5 years back, his company would not be able to participate in commodities markets, but today it can. Similarly, banks have been allowed to become professional clearing members in commodity exchanges. Then you saw that category 3 AIFs or hedge funds were allowed, mutual funds were allowed, and many funds are participating actively on the exchange. PM portfolio management services were allowed, eligible foreign entities or foreign hedgers were allowed. And going forward, I'm sure that you will get more participants like maybe banks or insurance companies, NRIs, FPIs. If the regulator so deems fit, I'm sure they will give some more and more participants to this market. So this market will become more broad-based in terms of institutional participation as well. On the product side, earlier we only had futures, then we got options on futures, then we got options on goods, then we got index futures. And with this, we are seeing a growing basket. And hopefully later on, we'll get more products if the regulator again allows, like maybe options on index futures, then maybe weather derivatives or freight derivatives, or there's so many things which could come up. So we are seeing that because because of these products, historically at MCX also we are seeing that options participation is increasing. We launched options in 2017 Dhanteras, but after 2.5 years, 3.5 years, we are seeing that option participation is increasing manifold. And just to give you some stats is that this year on some days we are doing 10 times of what we were doing in last year. And on an average also, we are doing 5 times of what we were doing last year in options. So in that sense, options trading has really taken off. Excuse me. Then in index futures also, which is a great way for anyone to build a virtual portfolio of various commodities. So like you do basket trading in equities, similarly, you have a ready-made basket, like we have Buldex, where you can do bullion. Gold and silver is there, 70% gold, 30% silver. Or you have the metal dex, where we have all the 5 base metals, copper, lead, aluminum, zinc, and nickel in various combinations. And you can, at one shot, buy the entire index or sell the entire index and get the exposure to the entire basket of these commodities. So you don't have to take individual exposure to various products. And hopefully later on, maybe we could see ETFs launched by mutual funds basis these indices. So there's so many possibilities for these markets that I think the only way for it is up in terms of growth. And because of this, I'm very excited to have Ramesh and Kunal with me today here, and they will share the market perspective. Kunal brings with him a lot of research experience, and Ramesh also brings with him a lot of commodities and currency experience. So one by one, I would like to invite them to speak. But before I do so, I would like to inform you that we are launching the third of our series of index futures, which is the energy index, on 7th October. So it's the first day of Navaratri. This year we are launching the energy index futures, which is basically a combination of crude and natural gas, 75% crude and 25% natural gas. So I hope and expect your wholehearted participation to make this product also a very successful product. And the margins here, see, the advantage of our index futures is they're cash settled products. And another advantage is at present crude has a 20% margin, natural gas is a 13% margin, but this energy index will have a 10% margin. So in that sense, it is also a product which could go, it could, suit many people who would want to trade in a basket of commodities rather than individual commodities. So having said that, now I would like to invite Ramesh Varakhedkar from ICICI Securities to share his thoughts with you. Thank you so much. Over to you, Ramesh.
Hi, good afternoon, everybody. Thank you, ANMI. Thank you, MCX, for having me here on the webinar today. It's a pleasure interacting with all the ANMI members. Rishi gave a brief about the commodities, the background, 18 years of existence, SEBI's approval, unified license, so on and so forth. As the agenda is recent developments in commodity markets, I would like to take up one of the recent development which has hit the market and I believe has been hit with many of the investors, which is indices. Rishi also talked about the upcoming launch of energy index. But to just give a brief about commodity indices, commodity indices solves most of the challenges faced by commodity traders who trade in single commodity. In case somebody is trading in a single commodity, the positions and margins are all concentrated in that particular single commodity. Today, to trade in copper, there has been a rally in prices of base metals. Today, to trade in a copper, the contract value is more than 20 lakhs. Nickel is more than 20 lakhs. The margin requirement is 10 to 12%, which is more than 2 lakh rupees. So in case somebody wants to trade into a single commodity, the margin requirement is more than 2 lakh rupees for products like copper, nickel. Similarly, if at all you take other base metals like lead, nickel, zinc, the contract value is more than 10 lakhs with the rally in the prices. a gold 1 kg contract is almost 45-46 lakh rupees, silver 30 kg is 20-25 lakh rupees. So the margin requirement is pretty high. So indices solves the problem because the margin requirement is just 6 to 7%, and it's a basket of all these products where one can trade. So portfolio is also diversified. So I just give a brief about the different contracts and the margins which are required. The biggest advantage is all these indices are cash settled. Now, we have seen that all these commodities have become compulsory delivery except for energy, which is crude and natural gas. So all these positions, whatever are there of the investors, obviously in staggered delivery, they need to close off their positions before they move into staggered delivery. Whereas in indices, it's a cash settled product. So like your Nifty or a bank Nifty, it just gets squared off and is settled on cash. So that's the biggest advantage. If at all you look at, in case I want to highlight 5-6 points on what is advantage of indices. I told you one can take position into one index instead of taking position into multiple commodities. It's also a good tool for portfolio diversification as the portfolio is diversified and you invest into multiple commodities. It's simple and easy to trade. It just works like futures. They are all futures, index futures, which are traded. Mid-size contracts, the value of the contract is between 5 lakhs to 10 lakhs. So today, let's say metals at 16,000 and a unit is 50 units in a lot. So it's approximately 8 lakh rupees. This is what is the value of the metals contract, that is metal index. Similarly, bullion is close to 7.5 lakh rupees. So the contract value is between 5 lakhs to 10 lakhs. Whereas if at all you go to single commodities, I've just mentioned copper, nickel more than 20 lakhs and other base metals more than 10 lakh rupees. They're all cash settled, no delivery, so no tender period margin. They're also pretty liquid, decent volumes happening on exchange. And the traders can also look at some arbitrage between the indices and the single stock that they trade into. There are enough opportunities which are there. Efficient price discovery is there. The bid ask is pretty tight. And the most important part is cost of transaction is also very, very low. So today in the discount broking scenario, one can just break even in 3 or 4 ticks of index movement, which will cover all the costs, regulatory costs, etc. So to move ahead in bullion index, let's understand what is the composition, how does bullion index work. So in bullion index, 66.6% is gold, and it's a combination of gold and silver, and 33.4% is of silver. And this composition will remain same for year 2021, and it is adjusted every year in the month of October. October will get the what should be the combination for next year, and that will be applicable from January onwards. Trading unit I mentioned is at 50 times of Bulldex. Margin requirement, if at all you trade in gold, the margin requirement is close to 9 to 10%, silver is 10, 11, 12%, whereas in index, margin requirement would be only 6 to 7% when it comes to bullion index. So these are the advantages, and this is what is the composition of Bulldex. Similarly, if at all you look at metal dex, it's a combination of 5 metals, which is copper, nickel, zinc, aluminum, and lead at various composition. And these weightages keep changing, as I mentioned, every year. And it changes as per 2 things. One is based on the physical market size for last 5 years, which has got a weightage of 25%, and current year's liquidity in that underlying single commodity, which weightage is 75%. So to sum up, one can look at investing and trading in indices and can avoid single commodity exposure by allocating huge margin. Indices are a good bet. And to diversify risk, it's a great tool with very, very low margins, and most important, they're all cash settled. So that's all about Nifty. We were talking about the recent developments in commodity markets. So one is the commodity indices, and the second one, Rishi also talked about how the options volumes have been going up in exchange. There have been times, or consistently, the crude option volumes are much higher than the crude futures volumes. And with SEBI peak margin coming in, I'm sure most of the investors are moving to options, because as a retail investor, since the leverage is not there, one can just pay the premium and then trade into options. So options is again a good tool, and there has been a lot of developments which is happening. Almost 20-25% of the exchange volumes are happening in options now. Coming to Indian commodity derivative markets is just 3 or 4% of the overall Indian derivatives markets. So I feel there's a huge opportunity, huge potential with options, indices which trade akin Bank Nifty and Bank Nifty futures. There's a great opportunity, and these are all good tools that one can look into and also trade into commodities. So those are the two things from my side, and we'll be happy to share more and take questions. Over to you, Rishi.
Thank you, Ramesh. That was very succinctly explained, both on options and indices. Now, I would like to invite Kunal, who has a rich experience in commodities research from Nirmal Bang. Kunal, over to you. Please share your knowledge and insights with us.
Yeah, first of all, thanks a lot, ANMI and MCX for giving me this opportunity and the warm introduction which Rishi had given. With whatever Rishi and Ramesh both have said, it very little left for me. But I'll just try to focus on the first point which Rishi spoke about, the commodities. Okay, so in today's time, people are having exposure to the multiple asset class, mainly equity and fixed income. These two, but now, why commodity as an asset class is going to remain under focus for many years going forward. The kind of monetary expansion in the balance sheet of the Western central bankers, the way they have expanded their balance sheet, it definitely calls for the major thought. A major thought should be given for the investors to be in commodities right now because of that. We don't know. We are right now in uncharted territory when it comes to future, whether there will be a tapering of the bond purchase program or not, whether these policies will continue or whether there will be interest rate hike, and all these liquidity, whether it is going to remain for a longer time or not. So even while we are talking about the tapering of bond purchase program, US balance sheet has already reached $9 trillion. So we are at the verge of a massive expansion of monetary policy, where the commodity prices are, forget about the bullish or the bearish trend right now, the value of this asset class is going up significantly. Second thing, the governments are finding very few ways to boost the growth. So one of the major ways they are, boosting up growth is via fiscal policies. So in US, everyone must have heard about a $2 trillion infrastructure package. China, the way in 2020, they have again, focused on the infrastructure and the housing market. So in order to generate growth, the world needs more and more commodities. And hence the value, forget about the price. I'm again reinstating, the price is not the major concern. The value of this asset class is really going to remain under focus. So now, from the exchange point of view, we are right now at that juncture from which the volumes and the growth which can come is absolutely phenomenal. The growth can come because we've already seen with the right kind of steps taken by SEBI and the exchange, we have seen already a good growth in last 1.5 years when it comes to volume. The new products, the major concern of the Indian commodity market was the new contracts, the new products were not getting enough attention. But MCX has been successfully, they successfully launched the MCX Bullion Index, and they successfully launched the Metal Dex. The volumes are pretty interesting. The way the participation is gradually increasing. So I think these are the green shoots which I see after a long, in last 15 years, the commodity market, which was just predominantly plain vanilla commodity trading. Now with the introduction of indices, this has become a market, becoming a more mature market. More and more investors, the institutional participations are seeing it, are watching the volumes in these indices, these new products. And I think there will be a time when a lot of these fund houses will have exposure towards these new products. So the volume is just going to take off from here, but obviously in a gradual fashion. So I'm basically recommending and vouching two products which really, as of now, is looking very lucrative. Is the energy index is not come yet, but the MCX bullion index and the metal index. So these two index are doing exceedingly well. So the traders who are not basically aware about what is happening in the physical market. So after 18, 19th of the month, when the delivery tenure period starts from 25th onwards. So it is the traders, I've seen this trend, traders prefer to take position in the metal index rather than having a direct exposure in the futures, because what is happening is the premiums are varying, the premiums and discount of the particular metals are going up and down. So for traders, it becomes very difficult to find out what is the discount today, what is the premium today, and hence the index is offering a much, the volatility of that is being smoothened out by the indexes. So if you see the volatility of copper and if you see the volatility of index, it is completely different, and you can feel that going forward, this volatility is further going to be smoothened out. The more and more this market becomes mature, the more liquidity comes. I think this remains very stable product to invest in. Apart from that, Rishi bhai also talk about the energy index. So now energy, I think with the 10% margin, it's gonna get a lot of traction, believe me, because right now the major trading takes place. If you look at the NYMEX crude oil, the tick, and if you look at what is happening with MCX, a phenomenal volume and the depth we have in the energy contract. So I think the energy index also is going to do well. Apart from that, the options which have been launched by the MCX are getting good traction when it comes to gold, when it comes to silver, even crude is number one when it comes to volatility and the liquidity. So I think gradually traders have started to realize, so the volumes are gradually building up, but with the wider participation of the retail clients and the more awareness about the options, I think the gradually the option volume will also expected to increase. And I think these two are the major development which is going on in the exchange right now. And we look forward and we recommend all the traders, investors to be a part of it. So apart from that, you know, what more lies for the commodities market going forward is the way the central bank's policies are going to shape up going forward. So for the first half of the year, we have already seen the peak growth in China, in US, in Europe. From the low base, the growth has really peaked out in the first half, and second half of this year, the growth is gradually going to go down. But what does this mean for commodity? For commodity, the major issue is the supply side bottlenecks which have been created in Chile, Peru, Mexico, in China, with the environmental concerns, US-China environmental talks going on right now. China, entire world is pressurizing China, you know, to cut down the pollution. So the commodity is becoming an interesting story from the supply side. So forget about the demand. Even if the world global growth is slowing down, the COVID cases are surging, and the demand growth is slowing down. But what is making commodity as an attractive asset class is that the supply side, after such a humongous price hike, what we've seen in last 1.5 years, is still not responding. So if you look at the supply of steel, if you look at the supply of aluminum, if you look at the supply of nickel, after almost prices have shot up by more than 100%, then too the supply side is not responding. So this is the first time I have been tracking this market from last 18 years, and for the first time this is happening, that in spite of such a humongous price hike, the supply side is not responding. So this is the time, you know, where the commodities are used by governments like China, US. They are treated as a structural asset rather than a trading asset class. So commodity historically is a trading asset class, but the way Chinese governments have been hoarding metals, the way they are releasing it right now when there is a lot of supply. So I think this asset class in next 1 year is going to do wonders. And with whatever products we have, thankful to MCX that they have come up with this wonderful contracts. So now we can finally smoothen the volatility. So it becomes very difficult for a retail trader to see a copper pricing moving up by 15-20 rupees throughout the day. So he need not worry about that volatility and just have an exposure with the M6 metal dex when he wants to go along, because copper is having the highest weightage in the index. So in this way, you can reduce your volatility, and at the same time, you can get an exposure to the market. And the moment you are connected with commodity, you are connected with the macroeconomic fundamentals of the global economy. So if the inflation data tonight, we are expecting an inflation data, and if inflation shoots up and you are trading in commodities, you will come to know if things are not good, then you will come to know at evening only that I have to be alert tomorrow morning, even in the equity. So even the traders who are dealing in the stock market, for them, trading in commodities is becoming boom these days. So and cash on these new products which MCX has come up with, you can hedge your futures position by the MCX options, and you can smoothen the volatility of the particular complex where you want to trade in by taking a position on the indexes. So I wish MCX all the best, and I recommend this to the viewers. And thanks a lot, Emni. I hope I've added some value in the given time slot.
Thank you, Kunal. Very insightful talk by you. Now we'll just take two questions. Kunal, first question is for you. Is that sometimes when equities move, we see normally all the equities moving up at the same time. However, in terms of commodities, we see that when crude or base metal moves up, then bullion goes down, and vice versa. Why is it so?
Okay, now the interesting part is in commodity, what has happened in last 1 year in particular, 1.5 years, is the shortages, and there is no price for shortages. So the commodity which are having a major supply side issues are responding quite sharply. So in last 1 month, if you see, copper prices have not shot up by not even by 4 to 5%. But in last 15-20 days, aluminum prices have surged from 215 to 235 on. So the China has cut the production by 10%. So it is very important in commodities to know the underlying, what are the fundamentals of the underlying. And that's the reason why commodities are not sometimes you see oil moving up. So you have a different news. They react on the news, they react on the fundamentals, they react on the data. So many things. So like you rightly pointed out, so there were instances in last 6 months, 8 months, where two metals are going up and other metals are not moving at all or marginally up. So there are instances when metals are moving down and oil is moving up. There are instances when oil and metal are moving up and precious metals are going down. So yes, this kind of volatility and this kind of opportunity is basically created because of the fundamental of the individual complex and the individual commodities.
Thank you, Kunal. Ramesh, one question for you also. Is that from an investment standpoint, how can one access the commodities market? Suppose someone is a pure investor, is there any way they can take delivery or do SIPs or create a virtual synthetic portfolio for indices? So what would be your advice to someone who wants to invest?
Rishi, if at all you look at, we have basket of products. When we say gold, it's not just gold 1 kg contract that we have. We have gold 100 grams contract, we have gold guinea, which is 8 grams, and gold petal 1 gram also. So there are diverse products depending upon the client's need or the appetite that the client has. So even for small retail investor, right, there's a great product which is gold petal. Value is approximately 4,500, and again it's a future 10%. One can start trading with 400-500 rupees, understand what is commodity, right, and maybe look at converting that into a delivery also, or maybe do a SIP. SIP, keep buying 1 gram, 1 gram, 1 gram, and then take a delivery of that 1 gram. So for an investor perspective, there are basket of products. If somebody is a large HNI, can look and trade into that gold 1 kg or silver large contract. But even commodities is not just a play of, I talked about the base metals and the large margin which is required. But there are also products like gold petal and gold guinea, where the margin requirement is very small, and even a small retail investor can start trading into commodities, understand futures, and then gradually move up the curve. So that's my recommendation. Look at product which fits in as per the margins or as per the risk appetite that one has.
Thank you, Ramesh. And that's all we have time for. So thank you so much, ANMI. And back to you, Mahesh. You're mute, Mahesh.
Hi.
You're mute.
Thank you, Rishi, for moderating this event. And thank you, Mr. Ramesh and the Kunal, for just giving the insightful information on the how to trade on the commodity exchange and the various products which is been available, and how to trade on the index which is available on our exchange platform, and the new energy index which is going to be launched by MCX. I think it is a very good insightful information with the members to trade on our commodity exchanges with the capital market as one of the asset class. Thank you all, and thank you very much, Rishi, Ramesh, and the Kunal.
Thank you.
Thank you.
Thank you.